Hi everyone, my name is Jacob. I'm with Capricorn Financial, and today we're going to talk about LLCs, how they're formed, what they're used for, who should form one, and how taxes and how you get paid work. So to start off, LLCs can be formed by anybody for the most part, by filing articles of organization with your state, and that state could be the State Department, your Secretary of State, the Commerce, Department, whoever your state is designated to form various business entities. There are some restrictions in some states of which professions can and cannot form LLCs. For example, in California, accountants, architects, and certain healthcare providers can't actually form LLCs. So anyway, you'll have to look that up for your state specifically, or just give us a call and we'll get that answered for you. So the how is pretty easy. You go onto the state's website for whoever it is. In Utah, it's the Department of Commerce, Division of Corporations and Other Entities, and we go on there and you can fill out the form they have online, and it provides and autofills in your articles of organization, and then you digitally sign that, pay the fee, and you've got yourself a company. Typically those are linked up with the IRS, and so you'll be assigned an EIN, and then later you'll get a letter in the mail from the IRS saying this is your EIN and this is when you can file taxes and yada yada yada. So it's pretty basic, pretty easy to do. Basically you can have one member LLC or 100-member LLC. There's not a restriction on the number of owners or members that you can have. Owners are called members, just an FYI. So anyway, that's pretty easy. The other document you're going to really want, if you have, especially if more than one, I would say anybody has more than one member in their LLC is going to be an operating agreement. That operating agreement kind of dictates how changes to the membership happen, whether it's through management, adding or subtracting members. It also spells out what happens if one of the members or owners becomes disabled or dies. How does that affect the company and what the various responsibilities are for that company. One of the biggest questions people always have is, how do I pay myself through an LLC? And that's kind of tied back to taxes. So we'll jump into taxes right off the bat. An LLC either does not file taxes if it's a single member LLC. It's usually a disregarded entity, and does not file taxes, or it'll file Form 1065 with the IRS and then the applicable state form. So keep that in mind. If you have more than one member of your LLC, you're going to need to file Form 1065. You won't actually pay any taxes on that form. All that does is tell the government who's in your partnership or your LLC, and kind of some basic financial data around your company. What really happens is all that money actually flows through your personal income, and then on your personal income taxes is where you actually end up paying the taxes. So all this just kind of flows through to your Form 1040, and we'll kind of jump into that. First, let's start off with how you're paid. A lot of LLCs are actually paid through what's called distributions, and these distributions are your payments. I recommend that you pay yourself on a regular basis, whether it's weekly, bi-weekly, monthly, just on a regular basis. For one, it helps with your cash flow and it helps with the cash flow planning for the business. You don't have to do that. If you wanted to wait till year end to get your big lump sum, that's totally fine in an LLC, although it might be a little risky, so we'll get into that. Basically, these distributions, though, are not run through a typical payroll run. If you've ever worked at a normal company, been a W-2 employee of another company, you know that you have some withholdings taken out of your check. You get paid $5,000 a month or something like that, but you really only end up getting $4,000 or something in your bank account. That's because the company is withholding taxes from you. As an owner of an LLC, you actually don't have any withholdings. If you're taking distributions, there's no holdings on those, because it all flows through to your 1040 on your personal tax return. So let's look at an example really quick here. Let's say that your business income, or net income I should say, is $100K for the year. And basically we're going to ignore if you've taken any distributions or anything like that. And we're going to say that you're not on payroll, you don't run payroll. In fact, most LLCs don't have a payroll system for the owners. They do for other employees, but not for themselves, not for the owners. So for this example, we're just going to say that at the end of the year, the business did $100K net profit, excluding any kind of distribution that the owners may have taken out. And we're just going to assume this is just a single member LLC to make things a little simpler, but the principles are all the same for multi-member LLC. So this $100K is going to flow through to your personal 1040, and you're going to include this $100K as income on your tax return. But it's going to flow through a 15% self-employment tax, and which means you're automatically going to be paying $15,300 in taxes. Okay, the other tax it's also going to be subject to your income tax. Now, this one you do get a deduction. The deduction for for 2019 for married couples is $24,400. So really, your taxable income is going to be $75,600, which puts you in the 12% bracket. So we'll multiply that by 12, and that's going to be 8,400 and I have this written down over there, $8,684. So between your self-employment tax and your income tax, you're actually going to end up paying $23,984 in taxes. And this needs to be broken out. That's going to be your tax liability for the year. Now, if you end up not paying any tax to the federal government or state governments throughout the whole year, you're going to end up with even more tax on top of that because of you're going to have some late fees and interest added on here. The law stipulates that you do have to pay taxes throughout the year, and so a lot of owners, in fact, it's highly recommended, if you don't do this, you're probably going to get in trouble, to pay quarterly taxes. You're supposed to file quarterly an estimated amount of what you're going to pay. So really what you do at the beginning of the year, and if you have historical data, it's even better because it kind of gives you a picture of, okay, this is where we were, this is where we're going to go, so we think we're going to make X. Basically, you want to kind of estimate where you're going to be for the following year, and you just kind of say, okay, total year, I think I'm going to end up paying $24,000 in taxes, and then you pay that quarterly. So every quarter you'd end up paying $6,000 in taxes if you're the single owner of this LLC. If you're a multi-member LLC, same situation. The difference is that instead of having the full $100K be broken out to one person, it's going to be broken out between the partners. So there's two, it'll be broken out between the two. And that's another advantage of LLCs, is you can actually decide how you want to break this $100K up in your agreement, your operating agreement, and in your articles of organization. You can have partners that will split profits 60-40 and losses 70-30. And you can have, or you can just split it 50-50. If by default you don't specify in your articles of organization how you want to divvy that up, or it's by default just split evenly, both profits and losses. So keep that in mind as you set yours up. In future videos, we're going to talk a little bit more about how to kind of reduce some of your tax liability here. There are some things we can do, forming different entities, electing different elections. For the basics, though, this is how it's going to go. So just keep that in mind. And if you have any questions, let us know. Follow us on Facebook, Coppercoin Financial, and make sure to subscribe to our YouTube channel, Coppercoin Financial again. Thanks, guys. Have a great day. Bye.